Hello out there in the accounting family. Welcome back to Accounting 1101. I hope you're doing well wherever you may be and whenever you may be looking at the video today. Our video right now, we're going to be looking at what I like to call the most thankless job in accounting. Okay, it's a job that you can do right 1,000,000 times in a row. And nobody ever comes by your cubicle, nobody comes by your office and says, hey, great job on getting that correct. But the one time you mess it up, you're going to get all kinds of angry phone calls. People are going to be mad at you. The job I'm talking about payroll. You can do payroll right every week for years and nobody comes and says thank you. But you mess up somebody's paycheck one time and you can bet you're going to hear about it. Unless you mess up on the good side. You give them more money than maybe they should have gotten. You probably won't hear about that. But if you short somebody, if you mess up somebody's paycheck, man, you're going to hear about it, and rightfully so. So payroll, one of the most thankless jobs in accounting. We're going to learn about a few of the basics of payroll today in our video. What we're going to get through, hopefully, by the time we're through the end of the video, I hope that you understand basic payroll terminology. I hope that you're able to identify and calculate common withholdings that we see in our paychecks as employees. And then finally, I'd like to illustrate the impact of payroll on the financial statements, because that's what we're all about in our current textbook here. So I'm going to take you way back to the days when I was working in public accounting. We're talking like 2004 here. I've been in the game for a few years. I was starting to make that big money. By that point in my career in public accounting, I was making $32,500 a year. Man, it was big money. For a kid from Pekin, Indiana, who never had any money, I thought I was rich, you know? Today, you probably think $32,500 isn't a lot of money, but man, I was doing pretty good for, 23, 24 years old back in the day. So here's a pay stub from my accounting firm. As you can see, I'm taking home $1,250 every other week gross. And you can see my take-home pay here, $975. You can see all the deductions here. My goal in the video is kind of walk you through all these deductions that are coming out of the paycheck, how they're calculated, what the impact is on the financial statements. And we're going to start off right here with the idea of earnings. You can see right here, gross earnings, net earnings. We'll save that for a little bit later. But right now, just looking at earnings, how do we calculate earnings and what are they? We kind of break earnings down into two categories. We have wages and we have salaries. Wages are normally kind of stated on an hourly basis. Somebody makes $20 an hour. Somebody makes $15 an hour. And of course, they're paid for every hour that they work. Overtime's a common feature when people are paid wages. If they work more than 40 hours a week, maybe they get paid time and a half. Salary, on the other hand, that's normally stated in terms of a month or a year. Like me, I made $32,500 a year back in 2004. Overtime was not a thing. And usually when you're on salary, it's not a thing. You work as many hours as you have to get the job done, and you don't get extra if you work 40 hours a week. Our firm was generous. They gave us comp time. And so our weeks where we worked more than 40 hours a week, we could get comp time and maybe take vacation time later. But we didn't get any overtime pay. Most people on salary don't. And so one of the things we have to learn when we do payroll is how to calculate, your hourly wages, total salary, and all that stuff. Now, gross and net earnings. You can see down here on my pay stub, we've got gross earnings, which represents the total amount that I earned. And then we have net earnings, which represents my take-home pay after all these stupid deductions are taken out. Your gross pay is the total, your gross earnings, total earnings before deductions. And that includes any bonuses you got during the period, overtime, your regular pay, it includes all that. Your net pay, your take-home pay, is that gross pay minus all the deductions that you're responsible for as an employee. And there's all kinds of them. And we're going to walk through them right now real quick. The first one, the biggie, federal income tax withholding. We have in our country a pay-as-you-go federal tax system, meaning you're paying your federal taxes as you go along every paycheck. And they're taking it right out of that paycheck from you. And one of the benefits for the federal government in doing that is they always have money coming in The other is if they take it a little bit of a time, you maybe don't realize how much they're taking from you, you know? And then when you do start to realize it, you file your tax return and you're happy because you get some of it back. It's an ingenious system for taxing people. And so that federal amount, in my case, 8201, a paycheck, that amount was withheld from me, taken from me, to pay for federal taxes. Usually that's the biggest deduction on your pay stub. I say usually, maybe sometimes your health insurance might be more than that, but usually your federal income tax is the biggest withholding on your paycheck. That amount that your employer takes out is determined by your W-4. When you start a new job, or maybe at the beginning of the year, you fill out a W-4 and maybe you don't know what you're filling out. You just write a number in for exemptions and you go on about your day. But that form is actually how they come up with the number for federal withholding. And again, you're responsible for that amount. That is withheld from your money. The employer is not paying it. They're just taking it from you and holding it until they send it to the federal government. The next deduction I've got here is FICA. There are two kinds of FICA taxes, Social Security and Medicare. Here we can see FICA, Social Security, $76.38 on that paycheck. So Social Security is OASDI, Old Age Survivor Disability Insurance. You pay it, your employer pays it, up to a certain amount of wages. Right now, in 2022, the Social Security rate is 6.2%. A 6.2% of tax on earnings up to $147,000. What that means is $1 that you earn all the way to $147,000 is taxed for Social Security, 6.2%. $147,001 on up is not taxed. There's a ceiling there. We are only taxed on wages up to $147,000. Your employer only pays the tax on wages up to $147,000. That number changes every single year. They raise that number every year. They raise the Social Security base. Why that exists, why they don't just tax it all, hey, I don't know. My conspiracy theory is because the people who make the laws usually make more than $147,000 a year. Medicare is the other part of our Social Security. Again, the employer pays it and you pay it. The Medicare rate is 1.45% on all the money that you earn. Doesn't matter. There's no ceiling like in the Social Security. Medicare, you're paying it on every dollar you earn, 1.45%, as is your employer. You can see I've got almost $18 coming out of that paycheck for Medicare. So, FICA, Social Security, Medicare. You pay it as an employee, your employer pays it. You pay 6.2% on Social Security, you pay 1.45% on Medicare. The total that you're paying is 7.65%. Your employer pays the exact same amount on your behalf as well. 7.65% total. So the total FICA tax, Social Security and Medicare, is 15.3%. You pay half, your employer pays half. If you're self-employed, guess what? You get the joy of paying both halves. One of the many benefits of being self-employed. You do get a tax deduction on your taxes if you're self-employed for the employer's portion, but you're paying both of them. Other deductions that you might see on a paycheck that the employee is paying. Again, these are amounts that are going to come out of the employee's gross wages. Employee is paying them. Maybe health insurance, life insurance, retirement contributions, charitable contributions. I know at the college here, they'll take the YMCA fee for your YMCA membership out of your paycheck. So anything that you're paying as an employee, state and local taxes would be another example. You can see here on my paycheck, I had disability insurance I was paying for, my cafeteria plan, which I think was dental and vision, and then my 401k, my retirement. This is in 2004. My employer paid every penny in 2004 of my health insurance. Isn't that wild? And I had no deductible in 2004. Didn't pay a penny for health insurance, didn't have a deductible. That ended about 2006, I think it was, 2006 when they finally stopped doing that. But it's kind of wild to think about now how expensive as health insurance is as early as 2000, early 2000. A lot of people weren't even having to pay anything. The employer was footing the whole bill for it. Things the employer pays. Again, these are not the responsibility of the employee. These aren't taken out of the employee's paycheck. The employee never sees it. The employer is handling it on their side. The employer's share of FICA, Social Security and Medicare, federal and state unemployment taxes are normally the responsibility of the employer. They're paying those, and also any amounts they're contributing towards your fringe benefits, your retirement plan, your health insurance, those amounts that the employer is paying. You won't see those on your pay stub. The employer's paying them. It's their expense. So the financial statement effects we're looking at here, when the employer runs a payroll, we have gross wages earned of $13,800. That's the total amount earned by the employees, salaries, wages, whatever it might be. Lump it all together. The accompanying employee deductions for FICA, and we're assuming 7.5% here instead of 6.2%, state and federal withholdings are down here. So $13,800, salary and wages expense right there. It's a hit to retained earnings because it's an expense. You can see it on the income statement. Wages and salary expense, just like you did in solid footing. Employees earned wages. You paid them. So that's the gross amount that we had incurred, that the employees had earned in total. You can see we've taken out FICA taxes. We've taken out federal income taxes. We've taken out state income taxes from the amount they've earned. The employee never touches it. Total amount they've earned. We're taking these amounts and setting them aside to pay the feds and the state. And then the remainder is the net pay that the employees were given, the cash amount that the employees got. Okay? Gross amount, amounts withheld from the employee, and then net pay. That's the financial statement effect. Obviously, cash is going to go down. The liabilities are going to go up until we send that money that we've withheld from the employee to the appropriate authorities. Well, what about the employer side? The employer is also responsible for a few taxes, right? Yeah, they definitely are. So there's a separate entry that we make for the employer's payroll liability, for the payroll taxes. Here we can see the employer is liable for FICA tax. Remember, the employee pays, and the employer pays the same amount. Unemployment for federal and state, also responsible for that. So you can see all these liabilities right here are the employers. That's the amount they're responsible for. They would recognize a payroll tax expense for the amounts they are responsible for. There's no payroll tax expense for the amount the employee is responsible for. We're just taking that money and sending it off. That's not really our expense, okay? The payroll tax expense is for what the employer has to pay. And you can see it is reducing our retained earnings because it is an expense. So we'll hit the problem set now. I got a little bit of background on payroll and the problem set. You're going to need to calculate FICA deductions using whatever percentages they give you. Take the wages and salary, multiply it by the percentages. You'll be fine there. And then we'll also have to illustrate that effect of payroll on the financial statement. This is a broad overview of payroll. If you have any questions on payroll or maybe on your homework, I'd be happy to help. Feel free to look me up. We'll come back with another video talking about the equity part of the balance sheet and looking at some of those stock and dividend transactions. We'll see you back here for those. Everybody take care.